senior markets correspondent. George, we're talking Nvidia, stock down 7.4% now, so starting to take a beating here on the back of some of this news. Do you look at this news as maybe material to the company or maybe a buying opportunity, because this stock's pulled back pretty significantly?
Yeah, it has. I mean, the context of the market, I think, suggests that, obviously it's been moving down over the past couple of weeks, and it's been soft. And I think this is sort of the big rotation, or what I consider sort of a cash harvest or a cash grab, because it's easy to sell Nvidia, a lot of market cap, a lot of liquidity to raise cash. Obviously, the move from a tactical standpoint was moving into the Russell and some of the large cap value areas. I mean, if you look at Berkshire Hathaway, just to give you an example, that stock is higher today by 1%, is performing quite well. So nonetheless, I think this may be an opportunistic, pullback, but it doesn't necessarily mean the pullback is over, considering, some of the vast, rate of change declines we're seeing across the board in the semiconductors. But just a few things to point out. ASML, which is a large semiconductor manufacturer as well, they actually guided lower. They also did this last time they reported earnings, which created a pullback in the entire space. But at the same time, you've got some political things going on, which again are adding to this sell-off. First off, there's more talk about export restraints from the Biden administration, and that's been going on. But at the same time, you've got the Trump administration talking about potentially, leaning on Taiwan to cover their defense expenditures, which, of course, the United States government spends a lot of money defending Taiwan and Taiwan Semiconductor in that region of the world. So I think those three factors, the ASML guidance was weak, and you add in the political constraints, plus the already, sort of exacerbated movement we're starting to see in these names, as there's been some rotation into the smaller cap areas of the equity ecosystem.
Nvidia stock has been facing some hardships recently due to the geopolitical tensions between the US and China arousing in the light of the presidential elections. But despite all the obstacles the stock has been receiving recently, the firm still has managed to bring great news to every Nvidia enthusiast and stock investor. It was reported that Nvidia is increasing its orders significantly with the Taiwanese giant TSMC. Such a move would have many super positive implications on the stock and on the company's profits and revenues. But what exactly happened, and how would it affect the firm? That's what we will go through in today's video, so don't miss out. But first, if you want to keep up with Nvidia latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
George, geopolitics entering into a trade involving the U.S. and China is never going to go away, not at least in the short to midterm. Nothing fundamental about this company has changed. Machine learning still expected to grow at about 19% a year through 2030. Nvidia and AMD are both talking about demand outstripping supply. They're probably both selling everything they can make. Like I said, nothing fundamentally has changed. So is this just something technically that you watch, wait for your time, and reinvest in this name?
I think so. I mean, I'm looking at it, even from a fundamental standpoint. Obviously, Nvidia has been an exceptional move. Going back to 2019, the stock is up over 3,000%. So, with that said, I think if you look at the financial fundamentals going forward, and right now, based upon yesterday's close, which is inclusive of the big move to the downside today, is trading around 46 times 2025's earnings. Now, if you look at the estimated EBITDA growth, the EBITDA growth is still expected to be close to 95%. Revenue growth is expected to be essentially, about 70%. So if you look at the forward multiple, it's trading at less than one times, its forward earnings growth. And at the same time, you have to look at profit margins, which are absolutely exceptional for Nvidia at 57% net income margins. Now, there can be some encroachment there, and that could come from competition, some prices that may be a little bit subdued going forward. And there's all this talk about some of the other mega cap players, Google's and the Apple's, now encroaching on the AI GPU technology space. I think those companies are just way too behind to cause any interference in Nvidia's. I'm going to call it a quasi-monopoly right now. AMD is starting to make inroads in the inference chip space, but they're nowhere near Nvidia's tech prowess in the GPU infrastructures.
According to some new reports, Nvidia has finally managed to increase its orders with the accomplished chip manufacturer TSMC by 25%, as the demand for Blackwell is much higher than the company expected. This move has been very long awaited, as the only obstacle that was preventing Nvidia from earning even larger profits and expanding its revenues to gigantic heights was the supply deficit, because the continuous demand on Nvidia's chips has been outstripping the supply capacity for quite some time now. This is a problem Nvidia has been trying to diminish recently, and this news tackles the problem from its core. According to a report published by United Daily News, Nvidia was expected to deliver around 40,000 Blackwell units, but this figure has been upgraded to 60,000, with the GB200 NVL36 accounting for 50,000. TSMC said that this didn't just happen overnight, as they have been witnessing a huge demand on these chips, especially from the tech giants, such as Meta, Tesla, Google, and Microsoft, who have been literally racing to get their hands on the Blackwell units as much as possible. Even Amazon, who's well known for manufacturing its own chips, couldn't avoid buying Blackwell chips in gigantic amounts. This isn't really a surprise, as Blackwell has already been named even before its release the world's most powerful AI chip, as the chip features 208 billion transistors, and it's manufactured using TSMC's 4-nanometer processor. This architecture supports AI training and real-time large language model inference. So, how would this massive order affect Nvidia's revenues and shares? Let's get right into it. Hello, everyone, and welcome back to Investocracy.
Let's talk a little bit here about the potential effect of policy changes, or I guess maybe just keeping current policies in place on this sector. This is a sector that has seen this coming. Has anything really materially changed in your view and how these companies should be looking at the potential for an increase in tariffs or other types of export controls?
Yeah. So the tariffs, not so much, I think, at least not directly. You have to remember the direct trade in semiconductors, raw semiconductors between the U.S. and China is actually not that big. It's only a couple of $1 billion in each direction. In the context of a $500 or $600 billion market, it's not that big. Most semiconductors go between the countries inside other things. The bigger issue, I think, was the export controls, and we did have some potential changes from the Biden administration. They've already, and by the way, I think it impacts not so much the semis, but the semi-cap players, the tool vendors. The U.S. vendors have already been operating under some fairly significant export controls that have prevented their ability to sell leading-edge tools to China. However, there are other non-U.S. companies where the U.S. has been trying to get the same kind of cooperation from them, and they've been a little hesitant. And so there were some news stories that suggested the Biden department was considering applying something called the Foreign Direct Product Rule, right? Which I won't go into what it is, but effectively it would enable the U.S. to effectively implement something akin to those same export controls on the non-U.S. companies. I am a little confused why the U.S. semi-caps are getting nailed on it, if that is what they are getting nailed on today, because to be honest, it doesn't really affect the U.S. Semi-cap players at all. If anything, it levels the playing field. The U.S. guys are already playing with one arm tied behind their back anyways. Would bring the international guys down to the same level. But that's the export control piece of this.
Nvidia's profits are expected to increase significantly due to the rise in shipment volume for its server cabinets, the GB200 NVL72 and GB200 NVL36, from 40,000 to 60,000 units. With the high selling prices of $1.8 million for the GB200 NVL36 and $3 million for GB200 NVL72, these additional 20,000 units could boost Nvidia's revenues up to a staggering $36 billion, assuming, of course, that all additional units are GB200 NVL36. This increase, combined with potential economies of scale and strong market demand for high-performance computing solutions in AI and data centers, supports substantial revenue and profit growth for Nvidia. And without a doubt, this is incredible news for TSMC themselves, as the already robust demand for its 3-nanometer processors, alongside the sweeping growing demand for the 4-nanometer processors, will boost TSMC's revenues alongside Nvidia. TSMC's former chairman Mark Liu, before handing over the reins in June, had already predicted that the demand for AI applications looks more optimistic compared to a year ago. Current chairman C.C. Wei has also indicated that AI applications are just beginning, and he is optimistic like everyone else. So, what does this mean for Nvidia's stock? And is it a good buy given the current situation? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
DJ Muse, Cantor Fitzgerald, Senior Managing Director, joins us now. He has a buy rating on ASML, price target of $1,320. And says, despite geopolitical risks, focus on growth. All right, well, let's start off with the geopolitical risks if we can, CJ. What do you make of it? Both, the former president's comments about Taiwan and perhaps more importantly, what may be coming moves from the Biden administration to even try and tighten up these restrictions on China getting a hold of high-end chips.
Yeah, good morning. I think, the potential for more restrictions is real, but I would highlight that, we've already limited EUV, unavailable to China, and ASML, currently cannot service 5 different factories in China. And so the intent is really to limit China's ability to build leading edge semiconductors. And I think that the efforts the Department of Commerce, the BIS, have put through have done that. But clearly when you saw that 7-nanometer chip come out of Huawei in China, that led to the red flag. And so, I think there are considerations. It is bipartisan in D.C., but I would, suggest that we've already done enough on that front. So I think, the pullback in stocks, particularly ASML, is overdone.
Nvidia's stock stands at almost $180 at the time of this video. And even though the stock plummeted thanks to the geopolitical tensions between the US and China, many analysts expect the stock to make a comeback for a variety of different reasons. For one, we have the magnificent anticipation for the Blackwell architecture, alongside expanding their supply. Besides the continuous innovation and the non-stop demand, Nvidia will 100% keep soaring, as the firm's revenue and profits are expected to increase by another $36 billion, which will definitely have a very positive impact on the firm's stock. Bearing in mind that Nvidia's supply chain has seen significant improvements over the past 2 quarters due to strategic partnerships and enhancements in production facilities. Collaborations with key industry players such as Micron Technology, Foxconn, Samsung Foundry, and ASML, in addition to TSMC, have been instrumental in this progress. Nvidia has encouraged these manufacturers to invest in newer technologies to expand and improve their production capabilities. This upgrade in the supply chain is crucial for Nvidia's rapid growth, as the primary obstacle to achieving higher profits was meeting the high demand for GPUs. By maintaining a robust and efficient supply chain, Nvidia secures a competitive edge in the GPU market, which is vital as it competes with other companies in the AI and high-performance computing sectors. With all of these givens, Nvidia is definitely a very good buy, especially if you're aiming for long-term investment, as the company has not fulfilled its full potential yet. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.